Alrighty, good morning. Welcome to another week of College Coffee Talk. I'm Andy Lockwood, Lockwood College Consulting, and this is a show about your questions. It's not about me or us or services. It's all about the questions that I have gotten and my wife Pearl has gotten over the last couple of years when we do our workshops and our free webinars. You name it, we get all kinds of questions. We don't always get a chance to answer them, so this show is an experiment for me to try to power through all the questions I've gotten over the last couple of years. So here we go. Maybe you'll have a question, and if you do, just pop it in comments. And as always, I always request people to comment. Let me know, if you are enjoying this, and please share. Please share with other parents who could use this info. So back in February of 2016, yeah, I told you we don't do a great job always of answering questions. Ruth Brodeen asked, what income qualifies for need-based aid? How much savings and assets will be considered? What if we own rental properties? Do we hold or sell them? And thank you. And you are welcome, Ruth. Okay, let me just check this off. So I'm just going to address the first question in the interest of time here. What income qualifies you, or conversely, disqualifies you for need-based financial aid? And the answer is there is not a magic bright line or a ceiling that if you go above it, you don't qualify, and if you're below it, you're fine, because the formulas, the financial aid formulas, include 77, at least reputed to be 77 factors that will end up calculating how much the government expects you to be able to pay for 1 year of college, how much the Department of Education can use. So I don't want to get too bogged down, but the short answer is that there is no magic number. And the reason for that, for example, is because the formulas include your savings. Not necessarily how much you have saved, but where you have it saved. So specifically, money in your kid's name is penalized, meaning your eligibility is reduced much more significantly than if it were in your own name. And there are a bunch of types of savings accounts, at least 4 or 4.5, depending on your situation, that are entirely exempt, that don't count against you at all. So income is, let's just stipulate here that income is the most important factor, but it's not the only one. So let me give you a real life example. So there's something called the Estimated Family Contribution, the EFC, that the government expects you to be able to pay. And each school will use that number a little bit differently. And some schools calculate it a little bit differently. But again, I don't want to get too bogged down. So let's say you make $250,000 a year. You probably think to yourself, okay, there's no way that I can possibly qualify for anything. Chances are you are correct. And the reason for that is because the amount that you're expected to contribute from your income might be roughly a third of that amount. So it could be, let's call it $80,000. So if you can contribute in the government's eyes, not mine, I'm not judging, don't shoot the messenger either. If you can contribute $80,000 toward college, and college costs merely $60,000, then you're not going to get any aid. This is an oversimplified example, because trust me, that's all you want. But let's say that in the second year, or maybe the third year that your kid is going to college, you have another child who enters college. And let's say nothing else changes in terms of your income. Well, that $80,000 contribution from your income is now split between the two kids. So now your contribution is $40,000. Your EFC is $40,000. So if the school is still $60,000, but now your EFC is less, it's $40,000, that means the difference is $20,000. You are eligible for up to, and I'm emphasizing that, up to $20,000, whereas 2 years prior, you had no eligibility at all. So that's why income is not necessarily a great predictor of whether you're going to receive any type of financial aid or not. And that's why there isn't a bright line magic number, because let's say you have 3 kids going to college, or 5 kids. We have a client who has quintuplets. They really do well in the financial aid formulas. Not so great with diapering when they were little, but still pretty good for aid. So that's the answer. I can give you rules of thumb, but that's all they are. So if you're applying to a state university, meaning in the state that you live or outside the state, but still a state university. So we're in New York. A SUNY is a state university in New York. SUNY Binghamton, SUNY Albany. And likewise, University of Maryland, for us, is an out-of-state state school. So if you're applying to either category of state school, chances are you're not going to receive anything with one kid in school if your income is much more than $60,000 or $70,000, somewhere around there. That's just the way it is, because most state schools don't have money. If you have one kid in school and you're applying to private colleges, my rule of thumb, private colleges that have their own endowments, my rule of thumb is that it's a little bit easier to get money, but it starts phasing out once your income gets closer to $200,000. Even at that level, at most of the really super elite schools like Ivies and equivalents, you might still be able to qualify with income at that level. It's just a lot harder. Again, those are just rules of thumb. My last comment, actually two last comments. My penultimate, thank you, comment is that even if you don't qualify for need-based aid, you shouldn't fret, because there's actually more money out there for non-need-based purposes, and that's just loosely called merit. It's not only for super genius kids. So that's just something I want to leave there hanging out for you. And my final comment is, if you're local, we're doing a workshop that's going to cover so much more of this and give you more examples and more tips. I'm just scratching the surface here. That is coming up this Wednesday night in Garden City, and the details to register are right here on the site. You can go to lockwoodworkshops.com and you can see our calendar. This is the last one for the month, and then we're starting to phase out the speaking just because we're finding we're not having enough time with all the other projects that we're working on. But I may even be able to drag my wife, Pearl, to this one. No promises. But if you are local and you have someone who is a class of 2018 junior or class of 2019 sophomore, this is one of your last few chances to get serious about the whole college planning process, not just the money aspect of it, but also how to, what schools to apply to, how to stand out from 5,000 other kids who look exactly the same as you on paper, so on and so forth. So all that information is right here. And again, please like and comment and share this so that you can help us spread the word. Any parent who's stressed out about any of this stuff, getting in, paying, whether the kid can, get in anywhere, how to choose a list of schools, you name it, that's what this is all about, is to answer your questions. So thanks a lot for watching. I'm signing off now. Andy Lockwood for College Coffee Talk. And tomorrow at 11:30 Eastern, Pearl and I are doing our weekly College Talk Tuesday show. So tune in for that. Thanks for watching. Talk to you soon.